What's up? It's Rowan here from Artist Smart Education with the weekly HSC Economics stats update. In this episode, we're looking at the US cutting interest rates, implications for the Australian economy, analysis for monetary policy, and impact on the value of the dollar. We're going to be looking at ABS data for the labour force that shows August's figure for unemployment, underemployment, and more. And finally, we're going to be looking at how the ACCC is suing Woolies and Coles and how you can use this as part of evidence for recent sort of microeconomic policy around competition policy and the role of the ACCC. So let's jump straight in. For those of you first time dialing in, I summarise the key stats and headlines from around the domestic and global economy, giving you the key analysis you need to score a Bansd in the HSC Economics course. So the US have cut interest rates, and they've cut their rate down to 4.75 and 5% as their corridor. Now, note, a big part of this is because the US, amongst other economies, went harder and faster, okay? And so we can see here that ultimately, okay, the other central banks are now lifting their rates. And the reason they did that is because the US, New Zealand, and Britain, and even Canada, okay, because they went harder and faster to control inflation, they're now at a point where inflation is under control, and in fact, they're needing to now move to expansionary, or at least slightly more expansionary policy settings. Now, the reality is, though, the reason Australia did not go as hard and fast is because, one, the RBA has got a dual objective of trying to prioritise employment, and so they're trying to also, reduce inflation without negatively impacting the labour market. Secondly, though, arguably Australia's transmission mechanism is more effective, and that is that we have, more, mortgage holders that, are, under variable interest rates or were moving from fixed to variable, i.e. the changes in the cash rate were going to be passed on to them, as well as it impacting more newer borrowers. And so the reality was that the effective rate for Australian borrowers has been much higher than the other advanced economies, even though their advertised rate has been a lot higher. So it is a little misleading to sort of see this on face value and say, well, Australian interest rates are well lower than the globe, and that's why, because we haven't aligned as tightly with macroeconomic global macro policy, it's why we've still got sticky inflation. It's why the economy is maybe not that great as well, and we need to reduce these. We should be following suit. So there's a complex picture there. But I think at the end of the day, this is some of what you could speak to in your analysis around monetary policy, that we didn't go as hard and fast, but we have arguably a more effective transmission mechanism with the effective rate of our interest rates paid by households being higher. But either way, we're still in an outcome where we've still got sticky, sticky inflation, and unemployment is starting to trend the wrong way. So, what does this mean? Well, I think there's a couple of quick takeouts we can also look at here on an interest rate differential perspective. So, if the US is dropping their rates and we're seeing that as the trend globally, what that's doing is it's going to start to reduce the size of the interest rate differential between, for example, the US and Australia. Now, at the moment, that interest rate differential is negative to Australia. At the moment, our cash rate is 4.35, and if the target zone is 4.7 to 5, right, the US cash rate is higher, making it more attractive, for investors to place their money in, US accounts. So, in other words, what that generally will do in interest rate differential that is negative is place downward pressure on the value of the dollar. Because that differential has shrunk, right, it's now got less because the US has reduced their cash rate. You can see some of that, arguably flow onto the Australian dollar. So this here, okay, is if we take a look at the value of the Australian dollar, this is, the 16th, of September, and then from there we've seen since that announcement, a move from, what is somewhere in the 67s, right, low 67s to the high, so the low 68. So it's gone up about a cent. Now, of course, speculation is, a driver of 95% of trade in the value of the dollar. So how much of this is purely just a result of the interest rate differential or speculation around, the interest rates in Australia and overseas, but certainly we can see, a little bit of a flow-on effect onto the value of the dollar. Now, looking really quickly at the labour force, the ABS has produced their unemployment data for August, and look, not a whole lot of change, but some important change at the same token, right? Unemployment, whether or not you're looking at trends or seasonally adjusted, has remained unchanged. So in trend, 4.1% unemployment, seasonally adjusted, 4.2%. Participation rate remained exactly the same across those as well. What interestingly has changed though is there has been an increase in underemployment, okay, when we look at seasonally adjusted, okay, where underemployment, for trend has remained the same. Now, what's going on here? Well, ultimately, okay, the real issue is that actually part-time employment has increased. So what's changed is that, we've got full-time employment decreasing and we've got part-time increasing, which is why we're seeing an increase in underemployment. Now, what does this reflect? Well, it does reflect a slowing economy. It reflects maybe jobs are being cut back and they're going from full-time to part-time. Maybe they're being cut back entirely and only the new jobs being created. There's not as much demand in the system that firms are not going for full-time roles, they're going for part-time roles because that's all they need. But it also could reflect business confidence as well in that, well, we're not going to commit to a full-time role here because we're not sure where things are going, so maybe we'll bring someone on a part-time basis. So we can see that ultimately, there has been a change, right? And that change is not necessarily on the positive. It does indicate a slowing economy for Australia. And remember that the labour market is often a bit of a lagging indicator. It can take a little bit longer to see the flow-on effects of reduced economic growth simply because it's derived from economic growth. And that's, I guess one of the things to consider when you're looking at the labour market. Now, finally, Woolies and Coles are being sued by the ACCC for misleading shoppers on discounts. Now, in Australia, we have national competition policy reform. The ACCC is responsible, for maintaining a level of competition in the marketplace, but also essentially policing, non-competitive or uncompetitive activities in the market. And in this case, misleading advertising is one of the examples. They also are responsible for things like, preventing collusion in the marketplace, right? And exclusive dealing and a number of other, anti-competitive practices. Now, in this case, the criticism for Coles and Woolies, and I actually caught this by, submissions from consumers as well, is that Coles and Woolies ultimately, and a good example of this is that, they were advertising an Oreo family pack for $3.50. They jumped the price up for a short period of time to $5. They then dropped the price down to $4.50, which note was way more expensive than the $3.50, but then they advertised it as prices, were down, they were cheaper. It's been discounted from $5 to $4.50. So in other words, they were creating fake price increases, right? To then actually advertise a new higher price as a cheaper price. And so, this was therefore considered to be misleading advertising, and they are at the point of, really taking Coles and Woolies, to court over it, to sue them. Now, of course, a big part of this is not just about, suing them, although a big part it is about actually extracting a penalty from them. A big part as well is really about the negative PR this will create, which is again one of the ways that the ACCC can maintain competitive market by placing essentially media pressure on companies to do the right thing when it comes to competition. Now, this also falls into the bigger picture in terms of the Senate inquiries around Coles and Woolies and the supermarkets pricing. And will really feed into some of the concerns that maybe we haven't got the market structure right here. In Australia, we go for workable competition, this idea that we tend to have 4 or 5 big players, almost oligopoly style, but what that does is it enables economies of scale while maintaining competition. Okay, while there's competition, so we get workable competition, which is the benefit of competition and economies of scale. What this sort of points to is some of the limitations in that, right? When you have a market structure that maybe is too concentrated in 2 or 3 big players, and therefore there, can be. It's just interesting timing that both organisations, Coles and Woolies, have used the exact same strategies, and obviously in a time where cost of living pressure is really high, it's fairly unconscionable. So that's something that you can use as some evidence when you're looking at the role of the ACCC, national competition policy reform, and what happens around micro reform in efforts to keep and create workable competition in the market.